Welcome to your Thursday SCF Crypto Show. You're joining with Nonya XPT. Today we're going to be looking at some of the analysis we've been making for the past week, the CPI data we received yesterday, some of the biggest impacting news from the SEC, Gary Gensler himself, of what he's been thinking about the crypto space, as well as some of the changes that MATIC is going to be making in the near future. Some of the news that we are looking at is the US government's ETF approval. So this goes directly towards Coinbase himself. So there's been a bit of an attack on the crypto space itself, where they're trying to register as many crypto assets as securities, as this will be most beneficial towards them as an institution that has a regulatory body, as a regulatory body institution that could govern the space itself. This obviously gives them a greater oversight over the crypto space itself and some of the tokens they are looking at, as well as the exchanges and institutions that work in the space and how they could regulate these places. Obviously, we're looking for greater regulatory bodies coming in to safekeep investors, but there's sometimes the SEC does not have the best interest of investors at heart, and this is what we're going to be looking at in terms of Gary Gensler himself, what he's been stating within the market and the news. But first of all, we're going to start off with a BTC chart and what we've been looking at. So from yesterday's analysis, what we were looking at is that from the CPI data yesterday, we were expecting a rejection of the news, even though inflation, well, CPI data itself, which gives an impact towards inflation, has come down. Right, this has been a negative adverse effect towards the US dollar. So the DXY has been in a downward range for quite some time, for a few weeks right now. The dollar itself, the index, the strength of the dollar has come down. Now we are noticing right now, and I've mentioned this before, as we can see, the arbitrary line that I've drawn through itself of the 3800 itself of BTC, or where we need to close above. Right now we are trying to grab some liquidity of the top sign. So there has been a few times we have retested above this region, and this is just from a technical analysis perspective of what is support and resistance, or what I deem the resistance line itself, of where we need to find support and have multiple closes, two closes above this to find support before we go to topside liquidity. I still have the belief that obviously crypto itself, specifically BTC, with the news that has been coming in, that it's not might not be the best news. And we're going to analyze that news itself and how we're going to draw liquidity zones before we obviously attack topside. So right now we are still within the range. This line here is not part of the range that we are in. The range that we are technically in is from the top side here, right, all the way to the bottom. This is the range that we are in. As you guys can see, the EQ of the specific range itself is where we've been having the most price action. What you would notice is when you can draw an EQ of a range, the most price action itself in terms of the most volume traded, not even in terms of the wicks, but the candle closes by finding support and resistance of the EQ, would indicate towards you that this here is the highest volume average, which is your PLC of a range itself, and this is where we've been finding the most movement in the market. So clearing this between the premium side and the discount of the range, and understanding that we are surmising, right? So this is our analysis, is that since we are in a range itself, and we would like for us to grab some liquidity due to us being in a distribution phase, meaning that even though we anticipate price going up and higher, that we would like to grab liquidity at the low side prior to doing so. So this is a daily forecast of it right now, and it might seem quite bullish today at probably 1.24% rallying right now. And you must know that there has been quite a lot of hawkish news happening right now in the crypto space. We're going to go through some of those news articles, and just how the crypto space has been quite resilient towards these impactful articles itself. So not just the articles, but what they actually imply in the market itself. So one of the articles we're going to first start off with, this is with the SEC, the US government. This is quite impactful towards the news, towards crypto, of what this news actually brings towards us as well. So first of all, there has been a pushback, not just from Gary Gensler, sorry, I pronounced his name wrong, but he's been indicating himself that he does not need to recuse himself or remove himself from crypto because of his opinions of it. So there are institutions in crypto trying to push back on this itself, that he needs to recuse himself. It's just because that a lot of institutions believe that he does not have a clear mind of it. He has a biased opinion when it comes to crypto, and we can obviously see this. So Blockchain Association has argued that, for instance, Gary Gensler himself, he has this biased opinion, and he's said every single thing except for Bitcoin is a security within this place. So, you know, it's, for instance, that's an attack on ETH itself. So ETH is quite a huge ecosystem, and there has been a lot of talks, I know, especially from BTC maxis, that is a security. But if you want to say it's in the entire space, you are obviously wrong. If you say BTC, that obviously means you have, from my personal opinion, as well as many other investors, I would say that you obviously have a hand in the bag on BTC, and you've been a maxi on this specific token for some time, and you like, obviously, for everything else to move the asset allocation and an influx from a dominance perspective back into only BTC, where the regulatory body itself wouldn't have much oversight compared to the oversight they're looking at other tokens within the market. So this is obviously good for us in any perspective, including if you are a BTC maxi. This would not be good for you. Having this type of oversight in the industry is not just the tokens themselves, but the institutions that come within the tokens. So we obviously have, for instance, we have Binance, of which they have BNB, and obviously they say they do not control BNB. Of course, it's the blockchain. You know, controllable part of a huge asset holding of your business and an institution is backed by BNB reserves, right? And putting that as a security and allowing you to operate in the United States, of which gives a huge influx of capital and investors itself that are willing to take higher risk itself, not just the investors, but the appetite towards risk. As a first world country, these are individuals that like to take higher risks for greater return, and limiting these individuals from participating in other tokens due to the SEC trying to regulate these tokens will be a huge hindrance within the industry holistically, right? So it's not just ourselves, for instance, saying I have BTC and this will be good for me and I don't need to worry, but it would be a bigger problem for us as a crypto space itself. So we're gonna have a look at the video that he's been discussing as well. So this is from CNBC, and we'll go through the article as well. Right. So we're gonna have a look at the video of sorry, this is from CNBC. So these are some of the analysts. They've been talking about what do they think of the news that has come through from the SEC, of what they think is, you know, the best solution for it. So obviously we all have the same backing and metrics that the US government shouldn't have this type of oversight within the industry. We're just gonna try and get that video playing right now. All right. So some of these investors and what they are looking at is not just the backing that the US government could bring in terms of institutions they bring in, is the type of limitations. And this is quite important. So if you want to bring in investors, obviously you need an oversight of this as well, right? You need an oversight of how you protect your investors. But at the same time, you cannot limit the growth of the greater institution that you're working in, well, greater space or ecosystem that you're working in. I call crypto an ecosystem itself, and this is the system of which we obviously work in as well. I'm just gonna give you a TLDR of this is a full minute meeting, and obviously as well as press releases that came out of it. So these have been thoughts on the Coinbase ETF that has come out, the spot ETF, and they basically hit back at this. So the US government hit back at this, but at the same time, crypto hit back right straight away out of this. So BlackRock, so this is not crypto, so we just have a backing in crypto. So BlackRock and Fidelity, they have listed Coinbase as a market surveillance sharing partner. This is obviously going against what the SECs are really trying to regulate and limit us from in the space, and they've decided to go out of their way and, you know, and say, well, this here, right here, this institution, this is our biggest backing partner to allow us to operate at a fair price right, at a fair at a fair rate, so towards our investors. And we know that this institution, which is an American institution itself, and how we could work with an American institution to bring in new investors, and especially looking at BlackRock, of which has billions of dollars, and Fidelity as well, billions of dollars, and they want to go on a spot ETF, and obviously they're going through Coinbase as well, and listing them as a market surveillance sharing partner. This allows Coinbase a little more strength when it comes to fighting the SEC against obviously ruling that they are an unregistered exchange, which has been the biggest issue for them. And this obviously has to do as well with their stock as well. So this is on the stock market itself, and saying that they are unregistered exchange, as well as the stock of which they do have, and saying that they have not given fair treatment towards clients, and that the potential problem with it is that clients, they saying that exchanges could have been possibly feeding off our clients. So we obviously know what market makers, we speak of manipulation in the market quite often, and this is kind of what the SEC is touching on. But the way they're using it, it might seem like they're on our side, but they're really not on our side. What they want is that they want to release the control that the Coinbase and other exchanges have, and put their control in their hands of how they can control it. We already know how market makers work, we know how the exchanges work. It'll be 10 times worse if we allow the SEC to put their control and their footstep on it. Because if the day you want to withdraw your crypto, and unlike going on to FTX, or where they stop your withdrawals through a bank run, they'll stop your withdrawals as each and every individual before you pay your Hamas tax, or giving them your your KYC documents over. And even if you're not American, they will try to, limit the exposure between different countries operating with Americans. Remember, it's not just that Americans can't invest in it, it's Americans can't invest in institutions, or which allow different countries, of which America has obviously limited in terms of their trade agreements, from, wars and whatever goes on in conflicts in the world. But these are the limitations that would come from it as well. So he's also expressed regulatory concerns about crypto exchanges, suggesting they could conduct conflicts in servers, potentially trading against users. He warned about limiting risk monitoring for wash trading in the crypto industry, alluding to a lack of transparency and potential market manipulation as well. So this is one of the biggest pointers that we need to obviously look at. Wash trading has been thrown at crypto from its infancy and from the time it was born. Using as which we will be touching on shortly is Silkroad. Right, so one of the black markets that used to trade, and BTC was of it, was the token or the currency of choice to trade off it. And then, the US government chose that narrative to drive towards crypto, and this is what crypto is. The truth is, it's not what crypto is what you deem crypto is, and how we had to move. The adaptation that happened, right now we see that crypto has been used as currencies of that are allowed to trade off on different countries. So Venezuela, not obviously the best example, but you can obviously use that as legal tender. So these type of adoptions might be the smallest countries, but this type of adoption is what crypto moved from Silk Roads to potholes, or rocky roads, as we would say. So rocky roads still moving in a positive direction of what we used to be. And now, speaking of the Silkroad itself and the tokens that we were speaking of yesterday. So yesterday I gave you guys just an update on the tokens that were moved off BTC, from the US government's holding itself. All right, so in total, the government had about 9,825 BTC, which accumulated to 302 million, right, that they seized from Silkroad. 8,200 of those tokens was split between 110 wallets. Now, this is what I spoke to you guys yesterday about, of those tokens being moved. Now, I did say this was unconfirmed yesterday. Today, those transactions have been confirmed. However, though, one thing we need to note is that even though those tokens have been moved, it does not indicate they are on any exchange to be sold. Funny enough, though, speaking of Coinbase as well as Silkroad, is that the US government has been using Coinbase to sell those tokens off. So there have been portions of which they had sold off. However, though, this time it's unconfirmed if these wallets, specifically, especially 110 of them, or any of those wallets being transferred towards an exchange to be sold. This looks like more safe storage and recycling of those wallets as well for safekeeping itself. And then there was about 2 wallets as well, of which moved 1,635. So that old wallets being basically split apart, right? So they split all those tokens apart, and now they're looking at safekeeping or possibly using those tokens to sell and obviously get rid of it, right? So if we had to look at it this way, there's obviously two possible options for it. The one is the most obvious, is that they are still holding on to those tokens, which is true. We have not seen anything in terms of moving to exchanges, and there hasn't been panic. And which is a great part, as we can see on the charts right now, is that the crypto space itself hasn't been in a panic because of what's been happening. Instead, we are analyzing data better than before. Most of the time when this used to happen, crypto used to tank immediately just from fright and flight. So as soon as it happens, before even reading anything, everybody from crypto decides, I'm going to sell every single bit that I own, and I'm going to now move over into, stables again, and then I'm going to be out of here because I'm too scared of what possibly could happen next as well. So we're going to have a visual representation of the tokens itself. So, proof on chain, this is why we in crypto, it's in the first place as well. Proof on chain is, the word of our game, especially. Let's move over. Right. So these are so yesterday we gave a bit of an analysis to it. So these are the last transactions itself. These are obviously labeled. So these are not confirmed, unlike yesterday, where we were speaking of the token itself, where those are unconfirmed transactions. Now these transactions have been confirmed. This is 4 hours ago. The movements of the BTC itself. And once again, the from news articles itself. So it is stated as selling, but these tokens aren't. So we have to Coinbase itself, but these aren't confirmed to be sold as yet. So 217 million to be sold, and the rest of the BTC has been transferred to new addresses. So what we do know from that is that nothing from, for instance, they transfer into Coinbase, the US government, even though they have been speaking against Coinbase itself. They've been moving these tokens to different places to be sold, but it's still unconfirmed of these tokens. Will they actually be sold on the market itself? Even though it gives high confidence towards the possibility of it selling. And this is why we're going to look at the charts and why the fake out right now that we are experiencing, as you guys can see the charts before I came into here, that's why BTC might pump a little. We are resilient towards this type of news, and we just don't start taking towards it. But there is going to be a huge sell pressure that will come out of this, irrespective, right? However, though, do note that the majority of those tokens that were transferred were just to new addresses itself, and does not indicate that we'll be, relinquishing. Well, the US government itself will be relinquishing its ownership of all the tokens that they do hold within BTC, of which they had seized from those hackers as well. Let's move back over to the chart itself, just from the BTC side. Right, so right now, as I said, we had the arbitrary line here, so not the EQ. Here's the arbitrary line right here that we need to clear for a daily close to be above. This is obviously within the premium range for us to attack greater liquidity. So if we close this candle here, that's still good, but tomorrow's candle will be the most impactful if we do close above here. Yesterday, we looked at the range that we were in, and I did indicate the news that we will receive yesterday, as most people thought it would be bullish. I said it will be hawkish because CPI did increase by 0.1%, of which has been the smallest increase as well of CPI data itself since 2022, if I'm not mistaken. I just had to confirm that. So we do know that, for instance, the CPI data might not have been most favorable news, but nor is it the most hawkish news either in the space. So we do know that CPI increasing itself by a small margin is towards their year-end goal of 3%. However, though, they, in terms of the core data, they're still not on track. And this obviously can give conflicting sides. What we will see is the conflicting sides within the chart. So we're looking at one specific daily candle itself right here, and this is where we found support. So the support is more of a structural support itself, where it came out of the regional of expansion to the top side before we try to grab top side liquidity. And this will be this candle here, the hammer that tried to come in here, right? And this is where we did not want to close below, right? So for the daily, we did not want to we tried our best not to close below, and we did grab some liquidity from that side as well before we now trying to grab top side liquidity. So this is just a structural perspective of the regional expansion before we went to top side right now. So from a structural perspective, we know that if you look over to the lower time frames, we'll just go through the chart itself just on a lower time frame. This is obviously a build of liquidity, right? So this is accumulation that we have had. There has been a deficit in terms of an inefficiency within the market that we cleared immediately. So the deficits or the inefficiency within the market here was cleared almost immediately, right? So this here was cleared immediately. So this is the fair value gap that was created after trying to create a higher high here. The fair value gap here was cleared, and once we cleared it, we found support on the value area low or the fair value gap. And now for the 4-hour chart candle that we'll be closing in the next 10 minutes itself, we'll be closing that in 10 minutes. We want to close above, of which will be quite bullish for BTC. If we do close above there, it does not indicate that we would seek it. As you guys can see, we've closed a few 4 hours above it itself. The most important is the daily itself closing above it, which will be bullish just for the day, and it would indicate that we might just want to attack, creating a new long-term higher LTH, right? So LTH could be created here for the daily. However, though, we know that liquidity will be left within the market, and the liquidity left on the lower time frames is what the market will be seeking in the future itself. So even though we are going to the top side of the range, this is obvious for us in terms of the trades we have been taking. The trades we've been taking have been long and trying to get to top side liquidity because we're trying to buy within the discount region and sell in premium. This is what we are doing within the range itself. We're trying to sell here. And this is what I've been looking at with our members itself on the private side. Speaking of the volume inefficiency that we've seen here and how we'll attack the volume inefficiency itself. And this I'll go over in great detail later tonight with our members as well. One of the other tokens we're going to be looking at is MATIC. So MATIC currently has a rebranding going on at the moment. They're going to be changing their name. So if you guys don't know what MATIC is a token part of the Polygon ecosystem. Right, well, it is the token of the Polygon ecosystem. And it's an Ethereum scaling solution that basically right now they're proposing for a technical upgrade for its native token as part of the Polygon 2.0 roadmap. Pending the community approval, MATIC will be converted into Polygon POL, which can be staked across multiple chains within the Polygon ecosystem. The proposed POL token is designed to operate across all Polygon protocols such as Proof of Stake, ZK EVMs, as well as Supernets. The upgrade for the MATIC to POL will require token holders to hold their MATIC tokens to a specific smart contract, which would return an equal number of POL tokens. So this is basically quite a simple swap over of a token, and one token will become redundant, and they will have a grace period. So I think the period for that is about 4 years. So the grace period for them to do that and swap their tokens over will be 4 years. Thereafter, you won't be able to redeem it. And this is written obviously on a smart contract level. You won't be able to redeem your tokens that you had as MATIC tokens to new POL tokens, and that's just a simple switch over. So obviously it's a rebranding that's happening. If approved by the community, the migration to POL could commence within a few months. So this obviously hasn't been confirmed by the team, but the Polygon ecosystems obviously trying to move away from MATIC. Now this is quite funny because MATIC has been one of the tokens that the SEC has been looking to investigate as a security. Indicated towards you guys not to try short MATIC itself. I told you guys not to buy this on spot market as well. However, though, if you want to trade this, the best option for you guys was to trade this on a futures contract because you have no mass, meaning you do not need to hold it for a period and create any love towards your token or members towards your token. What you're trying to do is make a fast return out of it, close your perpetual contract, your derivative contract, and hold your stable and not hold the risk over a period. So buying this on spots, I recommend it not forwards due to the news that's happening. And obviously the Polygon team has seen this as well. And they've decided, well, if we're going to go do this, the best option for us, instead of you guys obviously going through this as a community, what we're going to do for you is rebrand ourselves. It's not the same token. Goodbye. SEC investigate that token. We actually are Polygon. We are separate from that token. Investigate that token. Our members have nothing to do with that. And they're also trying to propose solutions that are quite cool as well in the ecosystem of Polygon itself. So for instance, proof of stake as well as ZK EVMs and Supernets itself, which allows them to stake tokens as well as reap rewards. So this creates less sell pressure within the market, which is a great idea for a token trying to migrate. So what they're doing is migrating the token itself. And what they're doing forwards the whole obviously more liquidity within the token. I'm not sure right now if they're going to move reserves over, what types of reserves they will be moving over, if that is approved. But if they do obviously move reserves, that will give a great opportunity, especially for the new token, if you want to buy something on spot itself. And that's a good spot play because it has no longer that hindrance, for instance, the SEC trying to investigate the specific token itself. So this is actually a great play. Obviously this is subject towards the approval of the community as well. And this is quite a nice thing, you know, community has say, and this is what voting rights are there for as well. Just a last note before I end, there has been some news as well towards AI tokens itself. Elon Musk released XAI. It was released yesterday. I was actually looking on my Twitter feed, and I think within 5 minutes there was a token created XI and XIA, sorry, I was pronouncing Xi. And then this token basically it pumped for like a good 30,000 X, obviously because there was no liquidity in it, and then rugged within 4 hours. And I just want to stress towards you guys to be careful because there are going to be a lot of AI driven tokens coming up in the future, especially now that Elon Musk, of whom has given support towards the crypto space. He's given support towards the crypto space, especially on Doge itself, well, mostly on Doge and a little bit of B2C. But there's going to be a lot of tokens coming up, and AI narrative is not something you want to fade, but it needs to be mentioned that you need to be careful right now, as there are going to be a lot of scammers coming up with fake tokens that will be rugging and dumping, and they're going to basically use ChatGPT 4 and regurgitate the same bullshit that, those AI tools are scalping off. Barely any AI, in my personal opinion. They just are scalping tools that create more cohesive sentences. And scalp the web way better. Still it's not able to create its own thoughts itself or create anything new. All they're doing is scalping. So a lot of people are going to use the same stuff, and this is the only reason I'm mentioning it, just not my personal belief on what the AI tools are right now. But the issue is what you will see is a lot of regurgitated of the same type of stuff of how AI is changing the game in crypto. So when it does come to that, try to look for the actual utility of what an AI tool can provide within the ecosystem, and not something regurgitated over and over and over again within the crypto space. So, be safe there, out traders. Know what you're looking at, and, happy trading.